A busy period for local economic data and for global markets, with risk sentiment continuing to improve despite the latest missile launch. A quick update on the market outlook and the latest confidence and jobs figures. After our GDP growth came in on target at a tick under 2% annualised and rates were left on hold again at these record lows, we heard a number of comments from our Reserve Bank that the jobs and investment outlook has brightened and that the global backdrop has also improved. But RBA Governor Philip Lowe did also note that over the past 4 years, household borrowing has increased at an average rate of 6.5%, while household income has increased at an average rate of just 3.5%, which is why rates seem very unlikely to move any lower. But at the same time, the pace of normalising rates should be measured, especially in the absence of a breakout in inflation. Interestingly, it's the same challenge in China, who also have rising levels of household debt. And the latest Chinese data was a fraction below expectations, with industrial production falling to 6% growth, although retail sales were still growing at 10.1% year on year. So our call for a Chinese soft landing remains intact. Other data around the globe has been pretty strong, including jobs data out of the USA. But for the states, the main game is will they or won't they be able to get the tax cuts through Congress? Stock markets there are back around record highs, suggesting they have a degree of confidence, plus some relief that the damage from Hurricane Irma wasn't quite as bad as initially feared. Back home, while business confidence and consumer confidence numbers were a bit below expectations, with businesses still appearing more upbeat than consumers, once again, it was the jobs market that was the star performer, with employment surging by over 50,000 net jobs growth in August, and with a healthy rise in the participation rate, which kept unemployment at 5.6%. Even the degree of underemployment improved a little, all of which fed through to an Aussie dollar still holding its own at around 80 cents, despite the US dollar regaining some of its recent losses on the tax cut prospects. And finally, the housing market locally is still on the up based on median house prices, but the perception of housing isn't so strong, with a sharp fall in the wisest place to put savings index, where housing fell to its lowest level in decades, just above investing in stocks, but well behind deposits and just paying off debt. We'll see if this perception actually matches reality in the months ahead and how the housing market performs through spring. And that's the market update from Bendigo Bank.